Please meet today's guest, Aly Madhavji.
So in the past, what's been a sort of a challenge is a lot of technology has almost been built for either like trading, it's been built for crypto natives, and it hasn't been very simple, hasn't been very easy to use. In the last cycle, you had a lot of people think they were using blockchain and were using centralized tools like BlockFi, Celsius, FTX, which of course all imploded and had a lot of people lose hard-earned money and went home Thanksgiving, et cetera, and told people, hey, this industry is terrible. And there's some merit to that. And I think we've damaged a lot of consumer interest in the space because of some of those challenges from centralized practices, which in reality weren't even blockchain, right? FTX, BlockFi, Celsius weren't actually using blockchain. Those were centralized products. And I think there's some challenges, some misconceptions, but I think this is the cycle where it really goes mainstream.
What if I told you there's a technology that could help a billion unbanked people access financial services, enable AI to transact instantly across the globe, and free businesses from big tech's stranglehold on customer data? Today's guest, Aly Madhavji, went from $1.50 an hour paper route to building and exiting a crypto exchange, then becoming one of the world's most active Web3 investors with 200 companies in his portfolio. But this isn't just another crypto success story. Aly's parents were refugees who fled Uganda with nothing but the clothes on their backs. And that experience shaped his belief that you can't rely on traditional systems. You have to build your own path. From his base in Singapore, he's now funding the infrastructure that could reshape how the world transacts, communicates, and builds businesses. Whether you're blockchain curious or a complete skeptic, Aly's going to challenge how you think about the future of technology and entrepreneurship. Let's dive in. Okay, and here we go, Aly. It's great to have you on the show.
Thank you so much for having me.
Well, let's start with you're kind of a globetrotter. So where are you originally from and where do you call home these days?
Absolutely. So I'm originally born and raised in Vancouver, Canada, and currently call home Singapore. So all the way, probably as far as you can get almost. But it's an incredible city, state, or country. If you haven't been there, you've got to check it out. It's kind of like New York, except much cleaner, no homelessness. It's almost like going into the future, but incredible, incredible country.
Nice. I haven't been there. I've done a lot of traveling, but we seem to always go the other direction. We go to Europe a lot. We've done several trips to South America, but we just haven't gone that direction, except to go to Hawaii a couple times.
There you go. So next time you're in town, let me know. I'll show you around and you can stay with us.
So I do love that part of the world up in the Northwest. So the defining technology or capability that sort of rules your life is blockchain, right? You love blockchain and you've done a lot of work with it. And so I want to kind of go back to the beginning. What kind of enticed you to sort of go all in on blockchain as a capability in the first place?
It's a really good question. I think a number of things sort of culminated, from a fairly young age, right? And so one, both of my parents are refugees from East Africa, right? And, escaped sort of Idi Amin in 1972. And many people sort of know the story about a military dictator coming to power there. And luckily was able to come to Canada, right? And start a new life with literally the clothes on their backs. And so from a young age, when I grew up, we grew up in a low income family, realized very quickly that, no one's really going to help you and you got to kind of figure it out for yourself. And, I wanted, different things as a kid and figured out I needed to start making my own money. And I remember, first starting to do a paper route, and I made $1.50 an hour when I calculated the amount I was making on my first check that came in the mail, and realized, hey, this isn't really working. I need to figure out something else. And so by the time I was 18, I'd started nearly a dozen small businesses. So I started everything from, computer networking, setting up for people in the sort of town or area, started, basically providing content, so peer-to-peer content, so TV shows and movies that people loved, helping solve computer viruses, all sorts of other stuff. From that, I ended up making sort of my own way to university, so kind of like first generation to university, and quickly understood the power of higher education to change social classes. And I looked at this as sort of a way where, people can have a fundamental ability to shift their trajectories. And from sort of all of that and, having, say, a lack of trust in government as fully sort of being there to maybe help you solve your problems, and me looking at it as, hey, you've just got to figure it out yourself. And you got to, figure out what tools you can have. And these sort of, this place is set up in a way that, you have a lot at your disposal if you can make use of it. And, when I came across Bitcoin, to me, it was an ability to basically separate from that system, right? So you don't have to trust government. You don't have to worry about government printing and inflation going up. You don't need to worry about wars being fought, with money that's being printed and, what the impacts of that are. And so that actually really, really stood out for me. So it was actually more from an ideological perspective than, let's say, a pure financial position or, mindset. Of course, in hindsight, it maybe looks smarter than it really was. But, you know, and I think even still today, like you're seeing a lot of that mission and vision, I think really still come to reality, right? Is like this alternative currency. It's not being printed, it's not being manipulated in that way. And I think it's still exciting as every single person, goes out and wants to hold Bitcoin. I think it furthers that narrative and that ability of this alternative currency to power global commerce. Now, blockchain itself probably goes a step further, right? So later on, I mean, from a blockchain perspective, the way I look at it is essentially this technology that helps solve multi-party trust issues. So in situations where humans might have challenges doing business together, you might have counterparty risk, you might be worried about sort of who you're working with, can you trust them? This essentially solves a lot of these types of challenges, right? And it becomes sort of this value layer in a digital world that becomes more and more important, right? And so we usually say that incredible technologies really take off and have exponential growth when they meet other, incredible emerging technologies. And so as you see what's happening with IoT or AI, I think it actually exponentially benefits each of them and collectively as well. And so, if you think about AI and how powerful AI is, it becomes more valuable when AI can transact on its own and can act on its own. And you can maybe set parameters, but then AI sort of works within those parameters. And so if you think about the currency that AI have to use, it's going to have to be digital currencies because they need to be instant. They need to be instant. They need to be able to settle anywhere in the world. And really the only choice is going to be leveraging digital assets. And you look at traditional currencies and it might take 2 days, 4 days to clear banking, et cetera. Like that wouldn't work effectively if you think about how AI would transact, if you think about how IoT needs to communicate. So Internet of Things needs to communicate machine to machine. It's going to be more effective having the auditability and the transparency that come with blockchain. So I think there's a lot of benefits in which these technologies each work well together, but blockchain ended up being that sort of that value layer across all of it.
And did you start any companies yourself? I know you were an investor. We'll get to that in a second, but did you start any blockchain related companies along the way?
Yeah. So I started a crypto exchange, actually. This would have been back in 2016, 17. It was a completely different market, right? You look at where the world is today, it looked very, very different back then, right? So Binance didn't exist as an example, right? Hadn't launched yet. Kraken, which many people use, didn't really work very well. I remember probably having the vast majority of my transactions fail when you tried to use it. Just there was a lot of errors. Anyone that sort of used Kraken at the time remembers. Bittrex and Poloniex may have been sort of market leaders around altcoins and sort of the start of altcoins, because this was still before the ICO boom that happened in 2017. And so it was a very, very, very different market. We were focused on markets out of Southeast Asia and India. And there was a lot of changing regulations, right? It was a time where your bank accounts for your company would get frozen, regularly or blocked regularly in the space. It was a time where, there was a lot of negative stigma around the industry, right? But, we looked at this and I looked at this and saw this sort of transformational power of the technology. Phenomenal to think about how far the industry's gone. So, we raised 3 rounds of capital. We grew our team to about 40 people. And, we started doing well. I think some of the challenges that came up was, September 4th, you had the China bans. We also had India bans in 2017, this was. And so a number of challenges there. So we actually ended up exiting the business at fortunately good timing in 2017, and turned out to work out pretty well, because then we started Blockchain Founders Fund, and here we are with 200 companies later.
So when you say exited, I assume you mean acquired.
Yeah. So I exited to a number of investors that were interested to take over the position. It wasn't a huge number or anything, but I think it was really good considering the circumstances. Markets peaked December 21st, 2017 that year, right? And then you had, if you remember, a major crash in crypto, 90+% down, pretty soon after. So I think timing wise, it turned out to be very fortunate.
So then you started this new fund. You and some partners are investors, and it's called the Founders Fund.
Yeah. So Blockchain Founders Fund, correct.
Blockchain. Sorry.
Yeah.
I left out the critical word.
Yeah. There you go.
Yes. There is actually another entity called the Founders Fund. Anyway, the Blockchain Founders Fund. Yes.
Yeah. So
tell us.
Yeah. So we then started Blockchain Founders Fund, and this is sort of maybe a good lesson for anyone that wants to, even break into a new industry where their passions are, right? From the perspective of hadn't been, say, an investor. Obviously, had done a lot of public stocks and derivatives and stuff like that at that point, but hadn't done necessarily a ton of angel investing. Only had a few things sort of under my belt. Basically, the idea behind it is, hey, we just exited the crypto exchange, right? Why not roll up our sleeves, instead of scaling one company, scale two, and instead of two became four. And so we put both our, some small amounts of money, wasn't huge, behind working with founders and rolling up our sleeves. And we earned some additional sweat equity in those. Plus, obviously there's that cash side, and we just continued to grow it. And so all of a sudden, 2 companies became 4 companies to 8 companies. We ended up having 60 companies. And then we went out and raised a formal fund. So, we had the track record then off of those first 60 companies. We had incredible successes. We had a number of unicorns that came out of that group in the crypto space, and it ended up leading to being able to go raise a fund from some of the most well-known investors in the world that came and backed the current fund. And here we are now at 200 companies. So it's, we've come a long way. We became the first regulated Web3 fund out of Singapore, which is a very, trusted jurisdiction. And, we love what we do. And one of the things that maybe differentiates us and maybe gives you a bit of an idea of the mindset is, like, I don't really think of ourselves as an investor. Right? We look at ourselves as, basically there to support founders, and almost as a founder, a very close partner to these companies. And so we come in, we roll up our sleeves, we want to work with them, solve the biggest problems with them. And, we're not there to go scold founders if they tell us a problem. It's not, hey, why did this happen? It's, how do we solve it? Right? And I think that's very important when you're even dealing with investors. There's there's almost that negative side of having the investor where it's, it's not constructive. Right. And that's not how we operate. Our goal internally is we want to be the first place that a founder thinks about when there's an issue, right? Say there's issues between founders or issues across the team, or, potential hiring challenges or scaling challenge. Like, we want to be the first place that founders come, because we want to basically go solve it.
I don't think everybody knows what Web3.
Yeah, it's a good question. I mean, Web3, like, overall, encompasses, blockchain. It's sort of the let's call it the modern definition of how people are looking at it, right? And so you're using sort of this technology. If you think about, how the internet sort of brought this sort of revolutionary layer, a lot of people are looking at sort of blockchain as a way that's sort of solving some of the next sets of challenges, right? So it's almost like creating that value layer, as I sort of mentioned, of the internet, and the ability to transact and move value, instantaneously, cross-border, without any of those types of challenges. And, we essentially encompass, from an industry type of definition, all of that technology, everything that's happening with blockchain related technology, everything that's happening even in reality with crypto kind of gets grouped into that Web3, umbrella, let's call it. So it's probably the easiest way to think of it.
So now you've got 200 companies that you've invested in. The first one's small investments, but you also worked side by side with them. And then once you get to 200, you probably can't work too closely with all of them. But there must be some key things you learned are there any themes of things you've learned in that process?
I mean, there's definitely a lot. I mean, that's what I do. That's why I do what I do, right? I mean, I want to basically work with the smartest people in the world and want to go learn from them and with them, right? And that's sort of what motivates me. That's also what drives me. And it's, helping founders make those visions a reality. And, there's been a lot of things I've learned. I mean, there's a lot of mistakes along the way, right? I mean, oftentimes, even in this industry, right? Like there's been challenges around in the early days investing in tokens and being misaligned with equity. And so you see that challenge still a little bit today. Some of it's washed out, but now one of the rules that we have internally is we just want the same incentives of the founder from an instrument perspective. So if the founders are going to launch a token, we need equity and token if they have both. They're only going to have a token, then we're fine with a token, but we want the same incentives. So that's a problem that we saw in the past where a lot of investors in 2017 onwards invested in, say, just a token, and the company had, equity that the value ended up going under. And so this is a whole problem in the industry. I think some of that is weeded out now. I think there's been challenges even around like, how to sort of get laser focused on what matters, right? In my background, so before I went into startups, I used to do corporate turnarounds. And one of the key things with corporate turnarounds is how do you stay laser focused on what matters, on the core, right? And so with corporate turnarounds, the idea behind it is like, you get thrown into a situation and, private equity firm tells you, hey, there's 4 months of cash left in this company. Go fix it before it goes bankrupt, right? Before Chapter 11. And you got to go in and figure out how do you go cut costs? How do you go figure out how to focus on the core and sort of rebuild from a stronger core? And in a startup, in reality, there's some merit to that, right? You got oftentimes a lot of ideas, a lot of things that could make sense, right? But you got to figure out what matters, what do customers care about, or what is sort of critical. And how do you go focus on like one or maybe one and a half, two things, right? Like you can't solve everything. Like if you build one thing that people love, you can use that as a way to grow. But oftentimes, especially in this space, you get a lack of discipline, right? A founder's like, hey, I could do any of these 20 things, but if you're trying to do 20 things, you're probably doing nothing, right? And that's been a big challenge. I think that's a startup problem in general, where founders often have ideas. Execution is what matters, right? And how do you be laser focused on execution? And so, one of the things that we do with our founders, actually, when we invest is, one of the things that we do is we actually have a project plan. And, we look at this and what we broke down this project plan into is, let's break down those goals that a company has into the next 6 months. So it's only actually 24 weeks, right? It's not longer than that. And so we want to know what are those major milestones over the next 24 weeks in a Gantt chart-like way. So it's literally, you're putting, dates, like what are you going to accomplish November 2025? What are you going to accomplish? And like by a specific date, like November 26th, 2025, or, May 30th, right? Et cetera. And then sort of what we call is those are sort of outputs, right? So that's what you would celebrate. What would you pop champagne over as a team if you accomplish, right? So what are those bigger milestones? Maybe it's achieve your first million in ARR. Maybe it's close your first customer. Like what are those sort of major things? And then we break it out into, across 4 sections. So, basically product tech, right? Marketing, finance, and basically across those 4 sections, what is basically the inputs that you can have, right? So it might be talk to 30 customers to figure out, what do they need, battle test, make sure it's what they want, right? Then it's maybe build a pipeline of 100 prospective customers and then go through that, because you can't actually control hitting MRR numbers or ARR numbers or sales numbers. You can only control inputs, right? So what are all these inputs that you can set up to increase likelihood of hitting those goals? And we try to have founders like stay laser focused on thinking of it like this, because it's important to, as a founder, to get out of, hey, I can sell this to investors and I have this idea, to what do I actually need to do today, tomorrow, next week to actually hit these goals? And I think that's very, very critical. So we like, helping founders around different aspects like this that can keep the business more focused, get away from maybe like focusing on too many different ideas, et cetera, and just, battle test one thing, make sure it works. If it doesn't, pivot, but like, very quickly, fail fast, figure it out, then figure out what can work, and then figure out how to scale that and make sure it's not a false positive, et cetera.
Hi, the podcast you are listening to is a companion to my recent book, Tech Startup Toolkit: How to Launch Strong and Exit Big. This is the book I wish I'd had, as I was founding and running 8 startups over 35 years. I tell the unvarnished truth about what went right, and especially about what went wrong. You could get it from all the usual booksellers, I hope you like it. It's a true labor of love. Now back to the show.
Positive, etc.
A lot of investors, maybe most, to deal with the fact that they've got to talk to so many people to then make their investments, get really good at pattern matching. So how do you evaluate founding teams that you're thinking about investing in?
It's a good question. I mean, we have a lot of criteria and a lot of different things that we go through. It's similar to any investor, but I would say there's only a few things that really, really, really matter, right? And so if I were to, look at these things, I mean, one, what's the track record of success of the team, right? And that's going to be important. And it could ideally be in this industry. It doesn't need to be, right? Because you can have success as you translate from one industry to another, but the more success you have in a certain industry, that might mean you have connections, you have ability to leverage some things to sort of help in the short run. But that might also mean you have biases, right? And you may not be able to get over some of those biases or rethink the way the system should work. So there's pros and cons to that to some extent. The second part that we find is very, very, very important that I think oftentimes is forgotten is it boils down to a formula that we put as progress over time. So how fast are you moving? So how much progress in as little time as possible, because the time is the denominator, right? And as you have indicators of that, you can start to see like, is the company moving fast enough to win? And it doesn't need to be, hey, we've got millions and millions of dollars in revenue. It could be, we built a pretty complex, tech platform in 2 months that maybe most people had taken a year to do, right? And that's already a really, really good indicator that their progress for what, might have been accomplished in other cases is done extremely fast in this case. And so we want to see indicators of that because it's probably the single most important metric in our mind around how fast the company moving in as little time as possible, because that's going to indicate a lot of different things. Go ahead.
Does that mean that you are avoiding investing in someone who maybe has a great idea, that has not done it before?
So, I mean, we will do investments from time to time in first time founders. Sometimes they're pretty young, but at the end of the day, right, it's all about understanding the skills gaps and understanding, can they do it? So if a founder comes to us and it's a single founder, they've never done it before and they're very young, what you got to worry about is like, well, how are they going to solve all these different gaps, right? They maybe haven't built tech platforms that are scalable. They maybe haven't, scaled on the marketing side a consumer product with any users, let alone millions of users, right? So you got to understand then like, well, if all of these are gaps, well, then how are we solving them? Because if there's not a great solution to solving them, well, then like maybe it's a business that should have had co-founders, right? And that would help you solve some of those gaps. Maybe it's a business that is going to need some very, very, very hands-on advisors to solve certain aspects in the short run, right? And so we want to understand that. Sometimes there's such a bold idea that it's going to take someone to reinvent a system, and that's going to take someone that's almost extremely passionate and maybe even in some ways naive, right? Because you've got to be so passionate, but you've also got to be a little bit naive or delusional oftentimes if you're running a startup and you're going to try to break a wall and build a new industry or change the way an industry works, right?
So if you saw someone like that, you might find co-founders to join them that are experienced, or you might help find advisors who can really add a lot of sage wisdom to the equation. Am I right?
So we can and we do in select cases. There's obviously a challenge from the perspective of like, as an investor, we look at 300 to 500 companies a month, right? And so we look at a lot of companies, even compared to other venture funds our size. And so, we can't do that for every company, but one of the things we do try to do on calls with founders is like, we'll give them honest feedback. And I think that's oftentimes even hard for founders to get because a lot of investors don't tell you what they really think. And I think as a founder myself in the past, and I still see myself as a founder, it's valuable to get that honest feedback. And so even to this day, I'll be at conferences or events and someone will come up to me like, hey, do you remember we chatted in 2021 and you told us XYZ? We pivoted our entire business around this and now we're actually doing super well. And so like, even though we didn't invest in it, it feels good because, they actually got something out of those conversations, with me or with our team, et cetera. And I think that's very important, right? Because part of what we're doing is also trying to build an industry, trying to build, founders. I mean, it's their livelihood, right? It's their families, it's their friends. It's, you're trying to build something incredible that sort of uplifts communities. And so I think it's very important to be very open with founders. I think when it's something we're really excited about, yes, we will explore, hey, can we pull in a co-founder here? Can we pull in, marketing support or other support here to fill these gaps? Because maybe it's a company that's technologically just geniuses, right? And, they've got something that's really, really unique, but maybe they don't understand the marketing. So it's not as hard to solve. Like if you're extremely strong, so this is another thing from an investment perspective. If you have a company that's like good in everything, it may not be good enough, right? What you're almost trying to find in certain respects is that they're great at some stuff, but maybe they might be weaker in like one or two things, because it's easier to solve those one or two things than make something that's good, great across a lot of metrics, right? And so
Mhm.
that's also important. So when you see, technological genius, that's not going to be an issue anymore, right? And they're going to be the best in the world at that side of things. Then it's okay. Well, how do we go solve the other challenge? Like, is it marketing, BD? How do we solve that? But like, you can explore solving some of those things.
Is there a mistake or, a small number of mistakes you see a lot of founders making that you'd love to project out from this podcast episode to potential founders and tell them, hey, this is a mistake that a lot of people are making and don't make it?
Absolutely. I mean, there's quite a few that come to mind, but I would say like one, I mean, make sure that you've got strong alignment internally and, you spend it, for example, we have that project plan discussion, you break it across, marketing, finance, tech, et cetera. Like make sure you have a 1 hour meeting every week internally and just have clarity and alignment. Cause oftentimes you see the technical side and the CEO, if the CEO is not technical or vice versa, right? You see like gaps, mistakes, like in managing internally and misalignment and not an understanding of why someone is doing something. And so you end up with founder issues. This is like very common. And I think it stems from not great process internally a lot of the time because there's not alignment. But then I think as you're finding product market fit, I think it's really about going out and talking to customers, right? Like I would say the easiest time to go get customers in a lot of ways is when you don't have customers and you're building a product, because everyone wants to vent about something that doesn't work, right? It's like a very common, let's call it human trait. Like I'm really pissed off about how XYZ works. And if you're trying to solve XYZ, like go talk to customers and hear them out, because they're going to feel like they contributed to your business. Very easy to set up 30, 40, 50 calls around this generally, right? And if you
Mhm.
have all of those 30, 40, 50 people telling you about a problem and then you're going to go fix it, the second you have something for them to test, they're going to test it. They're going to use it. They're going to feel like they contributed to it. They're going to feel like you built it for them. They're going to be your champions and advocates, right? So it's a really good hack. But we oftentimes find founders don't talk to enough potential customers. Like they're assuming what their customer wants. They might be even from the industry and might even have biases then. But as much as you can talk to customers is where the money is, right? I mean, it's a lot of people spend too much time, I'd even say, talking to investors. I think these are separate tracks, but spend time knowing your customer, building what your customer loves. You build something your customer loves, like investors will want to back it, right? And so as much as you can get close to that side is critical.
I think a lot of technical founders are very afraid of customers. It's a hard thing to get past. And yet a lot, I mean, one of the things that I say in the very beginning of the book is, it's the asking the question, who should be CEO? And if it's a tech company, then the CEO should be very technically adept, because they can then communicate the problem, the solution, talk to customers, talk to investors. So you're sort of setting it up with people who have maybe a little less comfort socially, a little less comfort talking to customers. And they need a lot of help and a lot of encouragement. I mean, I've done this over and over again to help people. Like, for example, just learn to use LinkedIn. There's some features in LinkedIn you don't know about necessarily. There's this thing called LinkedIn Analytics. It's free. It's there all the time. And you can zero in on people that have the profile, the title of the people you want to talk to. And then if you just learn to, a very simple message that you get out to people, and they come to you and they start saying, I do want to talk to you. And that can break the ice. And then that lowers the fear barrier that a technical founder, technical CEO might have.
Absolutely. And I would even say with this, like, in this day and age, there's so many tools at your disposal, right? So with the example you just gave, I would say as a technical founder, even as a non-technical founder, it'll take you under 1 hour to probably go learn how Phantom Buster works, right? Or other similar tools. And you can use it to basically scrape lists off of LinkedIn, or use like LinkedIn Navigator, like one of the sort of recruiter sort of type ones where you can sort of download more information. But if you use Phantom Buster, you can download and target, what is your ideal profile look like that you're trying to target? Figure out how to go scrape the 1,000 people that match that, then automate a message out that sends out to them, which you can use LinkedIn to do through Phantom Buster, and you can actually automate it. So now you might actually spend 3 hours of time, but you're actually going to continuously contact 1,000 people, 500 people, et cetera. So you can actually become more scalable, and then build a process in which, like, say they schedule on your Calendly, et cetera. And now you can actually like even save a lot of time and sort of start to build something a little bit more scalable, right? And I think it's and then try to A/B test your messaging, right? Is your messaging working? Have option A, option B, right? So champion, challenger. If it's whichever one's doing better, cut the challenger, keep the champion, do it again, right? Add a new challenger, right? And just keep A/B testing on everything. And it's almost a mindset, right? You got to do it on this. You got to do it on your product. You got to do it kind of through every little thing, because you're trying to optimize so many different pieces in a startup.
So let me just shift the conversation towards, future facing. The passion you have for this has come through loud and clear. What excites you the most about the future of blockchain, Web3, as you've explained Web3 to us?
Absolutely. I think what's very, very exciting, in it right now, is the ability that this technology is going to go out and help millions and millions of people in their everyday lives in this cycle, right? So in the past, what's been sort of a challenge is a lot of technology has almost been built for either like trading, it's been built for crypto natives, and it hasn't been very simple, it hasn't been very easy to use. In the last cycle, you had a lot of people think they were using blockchain and were using centralized tools like BlockFi, Celsius, FTX, which of course all imploded and had a lot of people lose hard-earned money, and went home Thanksgiving, et cetera, and told people, hey, this industry is terrible. And there's some merit to that. And I think we've damaged a lot of consumer interest in the space because of some of those challenges from centralized practices, which in reality weren't even blockchain, right? Like FTX, BlockFi, Celsius weren't actually using blockchain. Those were centralized products. And so, I think there's some challenges, some misconceptions, but I think this is the cycle where it really goes mainstream, right? I mean, for example, we've got a company called Credit that's basically helping to do remittances between Africa and the US and vice versa. And it also helps anyone to basically get small credit, using USDC rails in Africa and sub-Saharan Africa and soon in the US. And this is, pretty transformational. We're talking about millions and millions of people that have already gotten loans today using this technology. And this is like fundamentally important for creating potentially millions of jobs in the future, because each of these people are going to take small loans, they're going to build, small businesses, potentially pay other things, but that's going to help drive the economy. And when you think about developed economies, it's the ability to access, in large part, borrowing, lendings, and savings products, which form the core of banking. Well, you've got 1 billion people today that don't have banking, that are cut out of our banking system, that don't have identities, et cetera. And like, blockchain has the tech potential to leapfrog that and actually solve these problems. So I'm very, very excited about that. But today, you could even go onto the App Store right now and you could download the Miss World app, or you could download the hockey news if you're a fan of, the NHL and, all 32 NHL teams. You can actually see and comment and like posts, et cetera. And every single comment, every single like, every single post is actually on chain. It's actually on Web3. And one of the benefits here is it actually helps businesses to get away from the reliance on things like Google or X in terms of owning all your data, owning your customer relationships as a business. And so you can actually get away from that. And it actually promotes like independent journalists, right? I mean, you see journalists, regardless of what side of the spectrum, getting shut down or getting, cut off from advertisers, et cetera, because of their viewpoints or because of what they're covering. But, I'm a very big proponent in making sure we have a world in which we promote these freedoms, allow, people to, share what they need to share and not get cut off. And it doesn't matter what side of the spectrum you're on, because if you're saying, hey, it's the other side of the spectrum that's getting off today, like think about what's happening tomorrow, right? And we've seen this pendulum swing in both ways. And so, we need ways and technologies that even allow us to, build the future world that we want to see. And I think we're getting there actually with some of this technology.
Well, Ali, this is great to learn about. We haven't had anybody on this show talk about blockchain who, knows as much as you do about it. Everybody that's watching this one, I think, has learned a lot about blockchain and that you're, an active investor in it, and that you're a knowledgeable founder as well. I think you've got a nice that's a nice package, and I really appreciate you spending this time with us.
Thank you. My pleasure. And if you want to learn more about the blockchain space, we just launched a TV show on Amazon Prime Video. So it's called Crypto Nights. It's with Adrian Grenier from Entourage, if you remember Vinny Chase and Kim Lee from Bling Empire. So it's a great way to, one, have some entertainment, but two, learn about Web3 and blockchain in a fun way. And so check it out on Amazon Prime, and hopefully you like it and you get more immersed in trying out and, any of these emerging technologies. Because I think as any, young person today, you want to go learn about these technologies, you want to embrace them, and you want to figure out and sort of build your own opinions around these different technologies.
Absolutely. Well, great. I really appreciate your time. Thank you so much.
Thank you. Thanks for having me.
Now here's your startup founder toolkit. Takeaway 1, the focus formula. Aly's key insight is to focus on progress over time. How much can you accomplish in as little time as possible? Don't try to solve 20 problems. Pick one thing and execute it faster than anyone else. Speed of execution often beats perfection. Takeaway number 2, the customer delivery hack. Here's Aly's brilliant customer discovery strategy. Everyone loves to complain about broken systems. Before you build anything, find 30 to 50 people frustrated with the problem you're trying to solve. Let them vent. Involve them in your solution, and they'll become your first champions and advocates. Takeaway number 3, the alignment meeting. Implement Aly's simple but powerful process. 1 hour per week with your co-founders, breaking down progress across 4 areas: product, marketing, finance, and operations. Most funder conflicts come from misalignment, and this weekly sync prevents those costly breakdowns before they happen. That's our episode with Aly. Until next time, keep designing your success. The show notes contain useful resources and links. Please follow and rate us at podchaser.com/designing successful startups. Also, please share and like us on your social media channels. This is Jothy Rosenberg saying, TTFN, ta-ta for now.